Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Appreciate you stopping by and visiting today. Can I please get a screen and audio check in the Bookmap Discord TraderLab as well as YouTube? Thanks, Stephen. Thanks, everyone. Thanks, Stephen. I appreciate it. Well, everyone, welcome to Traders Lab. We had a big update yesterday off the report. Very interesting day to trade, and every day is interesting because every day is a bit different, isn't it? Part of that, of course, is based on participant behavior. And today we have some interesting dynamics taking place. And grab a pen and a piece of paper. A couple of things to think about. Now, this is so basic, yet we need, in my opinion, to try to simplify what appears to be complexity. Let's redefine complexity. Let's call it randomness. So we are always seeking order. However, we're in a market that is random. So where does the order potentially get created? The order is created in structured trade plans, not in the randomness of the market. And I think many, in his personal opinion, but many retail traders and even developing professional traders, unless they have specific guidance in a prop house, go through a process of trying to fit the market in the box, as opposed to maybe understanding the dynamic and random nature of the market, and then instead have structured plans. And when there's alignment, accepting a random outcome of any interaction, the same as gaming. And that's a big differentiator. And I think for many traders who are looking for this certainty and predictability, that maybe they're on the wrong path, because they're going to continually be waking up and trying to fix a process that is stuck in a random environment. Looking for certainty and randomness is kind of a conflict, isn't it? Maybe the idea might be to accept the randomness and then only interact when you have a statistical edge, accepting that you can't control the outcome because the outcome is determined by the participant behavior. And there's many different types of participants, different time frames, different agendas. So that is the nature of trading, in my opinion, and the TraderLab's built around these ideas. Let's not do what other retail traders do, even though the retail traders do get winning trades naturally. In the casinos, the gamblers get winning hands. Well, what does that all prove to us? Casinos are extracting dollars from the gamblers over time. Not every hand, so the gamblers walk out with cash. But in spite of that, the casinos are extracting the dollars from the gamblers, still paying the gamblers, paying for all the overhead, the cocktails, the buffet, and the rest of it, and maybe the tickets to Adele. By the way, what do you think of Adele? So the point is, if that is a business model that is proven, maybe instead of creating something different that may not be in alignment, maybe we just need to kind of emulate a successful business model. That's what the TraderLab is built on. And of course, past performance is not indicative of future results. You know, like everything in trading, there's more to it. The part is, I personally, and this is just personal opinion, I believe anyone can learn to trade. What I think is very difficult is letting go of beliefs where we have spent many years potentially trying to get something to work and then maybe finding out that it might not work. And if it doesn't work, we still want to get some yield or benefit out of all the things we've done. So we don't want to let go. It's almost like we want to validate the efforts we've made previously. So that is a conflict, which has nothing to do with the business of trading, and also not accepting the idea that we can't control the outcome of the trade. We only can control ourselves. The obstacle for us is actually vetting, doing the work to create a trade plan. Trade plan meaning structured trades that have an edge, and not interacting in randomness or making it up. And the other part is controlling our emotional state, or I should say managing it, because we can't control it. Big obstacle for us. So there's ways to work with that, and that's what the TraderLab is built on. General disclosure, all Bookmap Limited materials Information and presentation are for educational purposes only and should not be considered specific investment advice or recommendations. Grab a pen and paper, by the way, guys. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks for visiting the TraderLab, guys. I want to show you early on here a trade I took in the ETH, and I want to explain it to you. Now, I will tell you that it was not an easy trade to take. Not that any trade is easy because of our fear. But I want to show you the trade, and then I'll get into the, let's see if I can do this. This is a screenshot, and I want to explain it to you. So we had the report, and you know the report came in this morning, 7:30 Central Time. Of course, the market is bullish, right? And we had a huge gap yesterday. And we were trading both sides of the market, primarily long. Yesterday, neither here nor there. You can go back and review the stream. I've actually made that stream public for those of you who didn't get a chance to review it or would like to watch it again. A 40-point plus gap. What do you do with that? Well, TraderLab structured trades, if that's your inclination. And, you know, what does that represent? So you guys, there's a link. It's in YouTube. If you go to the Bookmap YouTube channel, you'll see it, my smiling face. So this is ETH. Now we had a bullish report, 7:30 my time, Central Time. Bullish report, going to the moon, Alice, and higher time frame up. So why would I take a short? Well, yesterday's high is here, and I can't show it to you on this chart, but I use something called auction market theory and the volume profile. All the volume profile is shows us where high volume is, low volume, and volume basically shows us a retail price. If the price gets too high, the buyers run out of gas. It's the same as when you go to the store. If it's got a high price, there will be some buyers at the higher price, but less. And if the price is fair, you get your high volume. That's called retail. And then if it goes on sale, you'll get buyers who go, oh, that's such a deal. You know, you throw a few extra cans of tuna in the cart when it's on sale, and then it comes back to retail. But there's another piece of these, and this is what a consolidation actually is, and you can see it over here. Now, the thing about this is, if we have a bullish report, you would anticipate the market would take out yesterday's high. That's what I was thinking. So, okay, and I'm thinking about it, well, this is interesting. If I get more buyers, and where's my sellers? You know, I'm looking for my seller. And I'm thinking, well, we could take out yesterday's high, stops, right? If anybody is short this thing. And then what? So this is what I see. Let me see if I can zoom in here. Okay. This, and I'm just showing you a trade. It's just a trade. And by the way, this is an aggressive, call it a counter trend trade. But there's a little bit more to it. What was the condition of the market before the report? And I don't think I can show it to you, but this is called the overnight volume point of control. What this is the highest volume in the ETH. We get the report, which creates, in my mind, a potential distortion. Also, at this price, and again, I can't show it to you, is yesterday's highest volume. So we have the following. Yesterday's RTH highest volume, which is like retail in the shopping experience. The ETH highest volume, which is retail in the ETH. So high volume is where the shoppers shop, right? Well, in microstructure, the same process takes place. So right here, I see high volume. I break low. Now let's think of the concept. If we get too high, what does the market tend to do? I'm not paying that. We don't know where that is, by the way. And then what might happen? Come back here. This is the full session VWAP. This is the overnight mid. Okay. So I'm giving you the rationale of this short. And my knees were knocking together and I almost spit my coffee on the screen when I took this trade. So here's what I was looking at. I'm just going to show you how order flow can help you. So I see this guy up here. I see volume here. I see selling icebergs here. I see this here. And I'm suspecting, and there's no way I will know it, this guy pulled and dropped here. Pressure. So he wants to sell, is my fantasy maybe. So I come up here and I see the buyers and these sellers interact right here. So I'm looking at this and I'm going, well, if I break back below this, now I have resistance. There's my entry. And then, of course, what does it do? It pushes up. Now, you'll notice my original stop was here. I pulled my stop up to here, and it missed me by 1 tick. That's called luck, and luck is useful in trading, you know? So I got missed by 1 tick, and this was a stop sweep right here. This is a sweep, okay? So they swept the book, and so there's the sweep and more iceberg selling. So I got lucky on this. However, we never took out yesterday's high. And I have a high volume node at 52, I think it was, and I believe the high is 52.50. I don't have it in front of me. So anyway, that's my short. This is my scale, and my target was here. And when this liquidity came in the book, I said, okay, we'll take that, because I didn't want to go through that. So it just happened. There it was. Bingo, bango. So anyway, that was my short in ETH. I just want to show you. And why did I do that? Because this is the retail price, and the condition was something called mean reversion, which is outside in. In fractals, this was the retail price or high volume. If the market gets too high, and who knows where that is, we'll run out of buyers, and we will potentially, and this is all you got is maybe, right, return here. So I wanted to show you that. And then, and this was the target, right? This shifts higher. So this trade would be over, if I was holding for this trade would be over here. So I got out there. I'm okay with that. So that's just one trade, you know. And this here, so you know, was yesterday's high volume node, which I was referring to. Yesterday's high was here. So, you know, your stop, as you could see where my stop was. Anyway, I just wanted to mention that to you guys. I don't call trades, and I take stops. So, you know, we're all in the same boat, literally. So let's go now into the RTH Open. By the way, if you have questions, please post them. Hope you're going to get something out of this. And please give a thumb up in YouTube. That's always nice if you find this useful. Okay, let's try this again. So this is the RTH Open right here. And now we're going to follow the yellow brick road. Now let's remember where we are. Or try to remember where we are. Here's the overnight volume point of control. Right here. This is your retail price. Overnight mid. And there's a couple other things here. Value area low, potential target. Settlement, potential target. Overnight low, potential target. Yesterday's low, which is down here someplace, potential target. Why would we target the low? Write this down. This is fundamental, and it's so simple. Remember, trading doesn't have to be complicated. We think it's complicated because it's hard for us to do it. Let's say maybe it's not complicated. Let's just say maybe it's just hard for us to do it. The market goes up to go down, and the market goes down to go up. If we have sell stops under yesterday's low, then we can anticipate, and a huge gap, we can anticipate maybe getting down into those stops and possibly trading in the gap. So that's one possibility. So now, and let's add the other piece. We tested in the ETH from that short that I took. We tested yesterday's high. We didn't get it. So if this, then that. If not, then what? If this is too high and I come all the way back, then what? I anticipate two-sided trade, and since this was too high, I'm anticipating shorts. And I'm as clueless as everybody. And if you think I'm not, whoever tells you they know what they're doing, Now, you might know what you're doing, but you don't know what is going to happen. So all these gurus out there and smart individuals who have the secret sauce, I don't have one. I don't have secret sauce. I have structured trading, statistical edge, probabilities, and maybe. Now, look at this phenomena here. We've been seeing this the past couple days where you get your RTH open and this jumps right in the book. This is liquidity. And liquidity, this is the limit order book. If you drop selling orders, these are passive, but if you drop them in here, it's pressure. That sets up a potential short. Now, let's just watch. It's not a short. It's look at that. This is the developing volume point of control. This is the highest volume. So you have RTH open and this. But right now, it's suggesting a downside rotation. This, remember, is the mean, or the retail price in the ETH. So this is now the new retail price, and it's developing. The thing about a developing volume point of control is it's dynamic. So it's going to move around as the shoppers or participants shop. So the idea of using the auction is this is a real-time price discovery process, and the volume tells us what the shoppers perceive the price is, or value. The goal of the market and why we have one is to figure out what's this thing worth. So it's going to go up, it's going to go down, it's going to do whatever it does. But in the short time frame or fractals that we trade in as day traders, the sooner we can determine what is happening potentially, and if we have vetted structured trades that come in alignment with what we perceive might be happening, we can then take risk, and over time, just like the casinos, even though we're going to pay the gamblers, we have the opportunity to extract the dollars. Write this down. The outcome of any interaction with the other participants is random. We have no idea. At least I certainly don't. I hope you do. So this is called a variable high volume node. And you guys have followed the stream. I'm very methodical. And what's that mean? Method. What's method? Consistency. What's the outcome of the trade? Random. What is anchored in your approach? Are you using random inputs like a little of this, a little of that, the smorgasbord of indicators? Multiple indicators, some align, some don't, some a little of this, a little of that. That's gambling, in my opinion. And you're gonna say, well, it works for me. Yeah, it works sometimes. You could throw a dart at the board and it's going to work. In fact, in 1987, after the market crash, I was trading the big S&Ps back then. That was a nightmare. Another story for another time. $500 a point. And I think we had a 10 or 20 point spread during the crash. So that was a little bit of indigestion. But the point is behavior, understanding the market goes up to go down, having a plan, and not using mixed indicators to give you conflict. You cannot measure randomness in a random environment and think you have edge. The monkeys, by the way, threw darts or pushed a button, whatever it was. They beat the analysts. Shows you even a monkey can have winning trades. Variable high volume node. And I'm not saying we're monkeys. What I'm saying is randomness works for winning trades. So our nature is to think we're on the right path and to keep doing the same thing, just trying to make it better. I've coined a phrase, and this is my experience, Trader Groundhog Day. I go, all I got to do is adjust this, maybe tune this. Let me go back and look at the rotations over the last 6 weeks. Yeah, this were to work pretty good. Maybe if I add this, adjust that. And that's what I did. And I did it on steroids because I built trading systems that would have optimization in them. So I would optimize because I was managing dollars over large asset classes, currencies, bonds, S&Ps, all this stuff. Metals. Can't remember. A lot of stuff. So I had to have a system. I couldn't do it manually. So as soon as some kind of computer came into the planet, And I started before there were computers or an internet, you see. So it really changed things. So I was pretty enthralled with computer power because it could crunch a lot of numbers and I could optimize. And just like you guys, I looked at like profitability, percentage of wins, all this kind of stuff, drawdown, and then walk forward testing. So all of this. Anyway, did it. I don't do it anymore. I wonder why. Why do you think I don't do it anymore? I'm sure others do it. Not me. Didn't work. Kept breaking down. And the thing was, I was trying to fit today's market into yesterday or last week, last month. Didn't work for me. So what do we see here? So this right here, this and this is showing me selling. So this is too high. That's my first quote indication in this that we're going south of the border. I break low. This shifts down. This is saying, I'm not paying that. Now retail. I pull out here to the mid and the VWAP. This sets up my first short. This is now my retail price. As soon as I come below this, this now in the microstructure is too high. My stop has to go above here, right there actually. Let's look further. Now these are shorts. So for me, I haven't had a long. Doesn't mean longs might not be a good idea, but and why am I again discussing shorts? What happened in the ETH? Where are we now? Right now, this is the ETH retail price. It is a potential target coming down in the overnight mid. Let me give you some statistics, guys. Past performance not indicative in future results. We opened higher inside of yesterday's range. Higher inside of yesterday's range means there's an 82% probability of getting there. The overnight mid, a 72% probability of getting there. Now we are skewed to the upside. A 69% probability of taking out the overnight high. But what happened in the ETH? We failed to take out yesterday's high. So I'm using that knowledge of what didn't happen to lean short. And the previous point of control, which is right there, so 67%, no surprise with that one. Previous value area low, 58%, overnight low, 49%, previous low, 37%. We are skewed to the upside. So why am I short? Because we have a 40-point gap. We have sellers here. And if you're sitting long, and we can clear this, it opens the door to everything below. Here's another short bet. So this is the first short. This is VPOC migration. Too high, Lewis. I'm not paying that. This is another short in the TraderLab. Risk would be up here. And this is a shoehorn. It's too tight for me, and you got VWAP in mid. So I'd be above here. So I have a short here, but a stop here. I got a short here. This is too high. My stop would still be out here. No clue. VPOC migration. Still going. Still, these are all shorts in the TraderLab. Now, right here, this is very important. Do I come back across or do I keep going? Watch. VPOC migration. So for me, short, 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 short. Now, it's not easy. See? Look. So right here, now I'm going to show you, I was on all this. Now I'm going to show you what it's like to be taken out, which is, of course, part of the joy. So we're coming down. I'm below the overnight volume point of control, overnight mid. I think we're going to zero. Well, I don't think that. But what I'm going for is my next target is this. Yesterday's settlement, overnight low. This has a low probability. Let's look at the stat for the settlement. And remember, past performance not indicative of future results. How do you prioritize what you do? It's a great question, isn't it? And if you're going to ask me, how do I know X is going to happen or Y, I'm going to say, I don't know. Because I don't. Hold on. 69% probability to get here. And don't forget the gap. Right? So let's look. So I'm going to show you the exit and why. So we are going lower. This is too high. This is the retail price. I'm not paying that. Come down here. Micro high volume. What these are, every time we consolidate, it's a chop, chop, chop. This is high volume in here, right here. I use these, and I show this in the stream all the time, as a way to monitor. If this is a consolidation, right? And in the profile, you can see it there. That volume right there, this is what a consolidation looks like in volume. It's a rotation, right? Too low, too high, and the one above it was here. So this is a consolidation. Chop, 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 break low, too high, come back to it. And this, fractals, too high, push off. What's too high? This. Let's keep going. Loving it, Lewis. Okay, break low, too high. Order flow, pressing, having a great time. Party animal, too high. High volume, going lower. Enjoying it, Lewis. Okay. Really? What are we going to do with these great profits? Oh, I don't know. Maybe buy a ribeye for the weekend. Huh. That could be useful. What do I see here? This is my over-under. Why? It's an auction. It's a consolidation. And this is too high. So I'm breaking away. This is marching down. Too high. I'm going to label it, by the way, because that's my job. Stay in alignment. And I can't see your questions, but put them in the chat, and then when I come up here, I will take a look. So this is the retail price. This here is my volume. I break down. Looking good, Lewis. Having a great time. VPOC migration. Going to zero. Right there. And I'm thinking, hey, this is really great. Got a nice trade. I think it's a nice trade. Let's look at change. Now, look at what's going on. Too high, right? Lower, here, too high, boom. What am I looking for? This. What do I get? That. As soon as I cross over, I exit the trade. Why? Where's the stops? VWAP, mid, and I'm looking to get short again. I'm just telling you, I'm looking to get short. I'm going, uh-oh. Where do I get short? Let's watch. Now, this is showing you the condition of the market as I'm moving this thing forward. This is a low volume node. Let me show you what these things are. Now, remember, this is too high there. So if I come across, if the market is now short, what might I anticipate? Well, stops at the VWAP, stops at the mid, and I don't know how far it'll go. You know, this is part of the joy of randomness. So I know if I leave this, which is this volume, there's buy stops above the swings, right? This is what we do. We trail our stops. Okay. So this is a squeeze. What about here? Well, that's mid and VWAP. What about here? I don't know. So I'm looking at these locations to look for behavior, and I have no clue. It's not my job to predict. Remember, I can't predict anything. What I know is what creates levels. So I want to see the levels. Right here is VPOC migration. So right here, this is now the retail price. It is alignment with this price right here. This is too low. Let me, and I've marked it. So too low, too high, too high. This shifts higher. So right here, let's look at the same behavior. This shifts lower. I break this way. Get out of here. I come back up here. This shifts higher. We're looking for this. What happens here? Shifts up, breaks lower, breaks higher, breaks lower. Liquidity comes in the book here. These guys absorb these sellers, and I get my bounce. So I know at the moment this is too high, and I know this is too low. This sets up a potential short. Let me show it to you. Here's the volume right there. Here's my variable high volume node right above it, and another one over here. So of course, if this holds here, it can bounce and come back and squeeze me out. This is part of the joy of trading. So let's look at the trade. Buyer. And right here, I see this. I'm not thrilled because I'm going, oh, because look what we did. We held this. So now this is my location to sell. See the sellers? These buyers are on the hook. What makes, when you have buyers and we don't go anywhere, what's going on? The passive side that you can't see except for over here in the limit order book, those are passive. These are aggressors. Buying delta and stops become market orders. Those are considered aggressors because they crossed over to get, they crossed. When you cross, that's delta. If you're passive, doesn't show up. So there's my seller. Sell stops, market orders, iceberg. Here, absorption. This is very conflicted. Let me show you the behavior. So our buyers are now here. That's the delta. They are stuck. This is what we call under the bus. High volume is there. This is our volume point of control. If it's too high, we'll leave it and check this. We did it. So this now is resistance. This is support. That's basically what you got right here. However, what statistics do we have? And what did we do in the ETH? And we have a gap. So I'm only leaning on the short side. Watch. Variable high volume node, too high. This here. Now, I didn't do anything here. I'd like to tell you I'm brilliant. Not brilliant. This is the level for the short. This is the support. Conflict, no trade for me. But I know I have my sellers. I know my buyers are here. My problem was this. As soon as I saw this, I said, well, maybe, we're going to come back across and squeeze out everybody else and go higher. I didn't take the trade. We broke here where these guys were the buyers, the iceberg came in. When we took these guys out, and you'll see right here, there was absorption. And we took them on and came below. As soon as we break below here, this now becomes resistance. Right there. I'm now below another level. Watch. VPOC migration. What can we do here? If we come outside, this is the VWAP in the mid. Okay. This is now too high. Let's follow the story. This is where these buyers failed. This is outside in. I'm leaning against this. This doesn't matter to me. It's the VWAP in the mid. I'll take it, but I'm basing my trade on the order flow and the alignment. So this is all important. But look, let's watch. Liquidity comes into the book. I'm liking that. I'm looking for the retracement. I took a short here against this here. And then I'm looking for this volume, microstructure, which is there and there. So that's my scale ahead of the volume. See the reaction. And then I'm holding the short. Now, let's watch. Let's look at structure, microstructure. So you know about this short against this thing. This is order flow phenomena. You can learn this in TraderLab. We come down below this, and I want to stay below it, of course. Let's look at the micro now. Here's micro high volume. Break low. This is where the buyer was absorbed. Come back and check it. High volume. So here, seller. Buyers take a shot. This buyer is stuck. I got my sellers in this leg. This was the last place, and I have no buyers. So I can keep my stop up here. I can, when I break away from this, I can pull my stop here or just leave it here. My job is to get risk neutral. So let's watch this thing. Come down here. Value area low. I mentioned this in TraderLab. This is a target. This is a target. This is a target. And yesterday's low is a target. So we're kind of, going for that. So this could be a target. You could be done with the trade. This could be the target. You could be done with the trade. Overnight low. You could be done with the trade. It doesn't matter. We have yesterday's low. Now this was really disturbing. I'm holding to get under yesterday's low. We also have something at 9 a.m. Let me mention this. Now I'm going to come up for oxygen and look at your questions. Thanks for your patience. At 9 a.m., whatever the low is at 9 a.m., which is here, this is called the IB30. Statistically, if we take out the first half hour's low, there is a high probability in past performance, not indicative of future results. All these statistics are available in the TraderLab. You're in YouTube. There's a link in the bottom of YouTube. You can access the TraderLab, download 60 PDFs of these structured trades. You could look at them, reverse engineer them, vet them, see how you might fit them into a plan for yourself. Also a library of webinars on this process that are exclusive to TraderLab participants and statistics. Everything you have to vet for yourself. This is not do what Tom does. This is, here's a methodology and a process. Then you actually customize it to your psychological or mental state. What fits? You can trade this in fractals, which means you could just be operating in these rotations or you're in a higher time frame. All up to you. So I was talking about this. There's over a 90% probability we'll take out the first hour's low. Once we take out, well, just so you know, when we take out the IB30, there's a high probability that we'll take out the first hour's low. So we have high probability is taking out the first hour low. That's called the IB low. So this is the IB low right here. So now that it's set here, there's a high probability we're going to take it out, and we want to take out yesterday's low. What's under yesterday's low? Sell stops and a gap. So it's like, okay, this is great. Wonderful trade. More ribeyes. What do we do? 930 is the IB low, which is the low here. IB low. Yesterday's low is right here. And I'm going, come on. You ever talk to the market, among other things? And I say more to it than come on. So I'm looking for this just to get down here. So I have a target and I'm looking for a drop. I don't know what it'll do. I'm looking for the drop, and because I have no clue. So basically what it is, if I can get under yesterday's low in their sell stops, I might see acceleration and then maybe pull back in. So it's going to be take out the stops, and then I'm going to be open for return inside something, and that's called the IBF. Okay. So I have three potential trades here. I have the acceleration down, and who knows, cover the short somewhere down the pipe. Don't know where. Gap, right? Come back inside is another one. Or if we accelerate down, if I pull back here, take another short for continuation. So I've got a couple possibilities. So short down in here, long back inside, or short down, pull back, fail to get back in, continue. So those are TraderLab setups. So anyway, this is the IB looking for this. Don't get it, okay? So I'm looking at this, and I get out. I get taken out, actually. Trailing the stop. So right here, this is my last high volume area at the time. This and this. I break below. I'm looking at this, and I'm thinking I'm home free. Not so much. I get taken out. So I go, what the heck? Now, what do I do here? Look, where's the high volume? It's here. There's my seller. Where do I come back? Here. I put the short back out here, right here. Get scaled. Where's my support? This high volume right there, going for break of the low. So I got taken out. This is my high volume consolidation. Sellers in control. These buyers, and you could see them right here in the delta, are stuck. High volume node. Alignment. Come back to the base of the consolidation. This is your breakout, if you will. And when you retrace, when you come up here, if it's too high, and I have a little different way of looking at it, I look at it as shopping. So when you have this chop going on, what's basically the market is auctioning this level. And then if it's too high, the shoppers go, I'm not paying that. If you come back and it's still too high, then they're going to sell it. These sellers are going to look at this as an unfair price potentially, and they're going to take advantage of it, and they're going to sell it again. That's what you see here. So I put the trade on, I scaled, and I'm holding. What am I trying to do? Get under yesterday's low, and I'm thinking, that was just this is just a squeeze. Now we're ready to go, right? Stop is here, risk neutral, right? Risk neutral, stops above the consolidation. I come back, ready to lose my lunch again. Where does it come? Here, micro high volume, in alignment with high volume. This is another short in the TraderLab. And you have to scale in front of what? High volume, which is there. See it? VPOC migration. I can't tell you how annoyed I was. And that's emotions, by the way. It has nothing to do with the trade. It has to do with me, being nutty. And so this comes down, and I'm looking at this. And what do I have? Too high, too high, too high, ready to lose breakfast, chop. And right here, I'm looking at this, and I'm thinking, and I get VPOC migration. I'm going to label it. This is now my retail price. Now, I'm trading in fractals. I still can't look at your questions, but I think I'm going to get caught up pretty soon. I really don't know, because I can't see what's going on. But break low. Take out yesterday's low. So right here, I'm thinking, I got you now. And look what happens here. Comes right back in. So right in here, I take it out. Where's my acceleration? I have sell stops coming out, and I get this. That's saying to me that right now, only the weak sellers are getting taken out. We're having a problem. Where's my acceleration? Look at my buy icebergs. 1,000 icebergs, 500 icebergs. We are seeing buying on the lows by the icebergs. That's not what I want to see. So I am perplexed. Come back across here. I'm flat. That's that. That's it. That was my last trade for me, and I haven't seen the rest of this. So let me look at your questions. This is a TraderLab structured trade right here, by the way, called VWAP to VPOC. And if you follow the stream, which I haven't seen, but I'm just saying that's what this is. Here to here, and then wherever. Manage the trade. TraderLab, any of you guys take the VWAP to VPOC? And thanks for your patience, guys. Questions? How are you guys doing in YouTube? Hope you're finding this interesting. Please give a thumb up. And remember, you have an open invitation to visit the Bookmap Discord TraderLab chat. Download 60 PDFs of these. This is a structured trade right here. This is a mean reversion trade. What this is, if this is the retail price and we come outside, what are we doing? We are rotational trade now. This is a context in a context. So the short is from VWAP to VPOC and then hold and manage. So for me, this trade, which I would be taking if I was not streaming, I'd be scaling here and then I'd manage the trade. That's all there is to this. It's not complicated. It is random. And then your next target might be here and you could be done with it right here. Outside edge. See, let's look at this. This is too high. This is your outside edge. There's high volume here. So retail. So I'm not paying that. Come back here, chop. It's also VWAP. Volume, retail, too high. I'm not paying that. So right in here, now let's look closely at this last trade. Liquidity, selling icebergs. Buyer on the hook right here. Buyers. This is a short. If it's in your plan, this is your scale. It's called mean reversion. Then you're looking for the IB low. You could be done with the trade here, or you just manage it. So I haven't had any longs. Doesn't mean anything. You could be trading alongside too if you have a plan for it. There was a long trade in here that I'm going to mention to you, but it's not a long for me. You know, it could be a long. I want to talk to you about it since I don't see questions. 9:30, we have that IB, wherever it was. Where is it? Here, right? So right here, no, we didn't get it out. So this is the, where am I here, guys? Is this the I, where's the IB? Low. It's here. Okay. So we break the IB. I believe this is the right one. And this is called the IB failure. It is a mean reversion trade. Now, what that does is it sets up a retracement to here and out here. So for me, it's not a long. It could be, you know, but it's not for me. But what it is a cover short trade. So in TraderLab, there's a few different ways you could use structured trades. It's a function of the fractal you operate in. This can be a long because it's a structured long. It's called the IBF, and if it's in those PDFs, and I talk about this all the time when it shows up. And it's a mean reversion trade. It's a short. I'm sorry. What you're doing is you're taking advantage because what you have is we got yesterday's low. You would anticipate that we would do the Acapulco cliff dive into this gap. It didn't do it. That means everybody who's short now can get squeezed. So it's a viable long. For me, not so much. It's a exit. You can use it either way. Doesn't matter. There's no right or wrong to it. So we come up. So I'm out and I'm looking for the short. That's basically it. So for me, there's a short back to here, you see. So it's all a matter of how you wanna do it, you know. So there's no right or wrong, you know. So the IBF is a mean reversion trade. This is also a mean reversion trade. So outside in is mean reversion. Outside in is mean reversion. This is the mean. So what you're doing is you're coming across and squeezing these guys out here, these swings. You always have to look left. Where's the fuel? Remember, the market goes down to go up, and the market goes up to go down. So it's outside in, squeeze, outside in, squeeze, out, and then potentially back. It's rotational trading. Different trade plan in TraderLab. And we still have the gap. Who knows? You're playing in a gap here. For me, and I'm not making any recommendations, I'm really good with going from here to here, down to here. I don't care if it goes to zero. By the way, if it does go to zero, I have ways to get in. So I just take pieces out of the market. Now, that's a personal choice. You could be operating in different time frame. Now, I don't use time. I use what's called fractals. In other words, the rotation, not the clock, But we tend to think of this as time. So subject to, now for me, if I'm doing this, bing, bang, boom, there's a lot of rotations. I just trade rotations. I'm a day trader. Questions? Hope you're getting something out of this. Please give a thumb up in YouTube if you're finding this educational. If you're interested in the TraderLab community, you can access the community. It is a serious community of traders. Senior Trader has over 50 years of trading that he admits to. I'm going on 45 years, both as a professional and now as a retail trader. It's a community, and the goal of having a serious professional community is to build a business of trading. It's not romper room. There's no nonsense, but we collectively come together to leverage our experience. Everybody has something to bring, and everybody can do their own thing. There's not a right way to trade, but we do know what doesn't work. And what doesn't work is randomness. In other words, random inputs in a random environment. There's an old saying in the computer world, you might recall it, garbage in, garbage out. Well, we need to anchor our inputs in a random environment. That's how the casinos operate. They play blackjack exactly the same way, but they don't control what comes out of the deck or how the gamblers play the cards. They do know if they're consistent, which means they don't change the game. They don't move their stop to break even, if you will, if they were in our business, because somebody walked out with a suitcase of cash on the last hand and they respond emotionally to the last event, because every event is unique. That's the truth of trading or a random environment. Yet our emotions, our fear of the pain and the loss, our wiring are what cause us to do things that are not in our best interest as traders. They are in our best interest as running from the saber-toothed tiger or leaving the burning building. That's our wiring. I call that, you've heard of Jekyll and Hyde, I call that Hyde. That is our emotional, primal, intuitive responses to what happens in the market, which we don't control. What can we control? We can control ourselves if we have a structured, vetted trade plan. And why would you want to vet a trade plan? Why do the casinos only play games to have a statistical edge? It works pretty well for them. I mean, look what they do. Pay everybody, give you the cocktail ticket to the buffet, even Adele, and they make profits and they're building larger casinos. They do it all day. Why can't we emulate what they do? That's what the TraderLab's about. And getting a handle on your emotions. Now, here's the thing about emotions. How do you get control? Maybe if you opened your trade plan, like we do in the TraderLab, and you knew this trade had X% probability of getting here before taking a stop, and we all take stops, so we can't avoid that. Gamblers get paid in the casinos too. The only way that the casinos get to extract the dollars from the gamblers is to pay the gamblers. Interesting. What business doesn't have overhead and costs of production? We don't want to pay? Hey, I don't like paying bills. Do you? No. But if I'm in business, if I don't pay my bills, I go out of business. If I have an edge in my business, whether it's widgets or trading, I pay my bills and I net a profit. If I have statistics, I've taken randomness and nebulousness and made it tangible. If I open my trade plan and see I have X% probability of getting risk neutral before I take a stop, does that give me the courage to put the trade on? If I get risk neutral, and this is based on a minimum 2-lot configuration, this is what we talk about in TraderLab, and it's the basis of building a business plan. And I know I have a positive expectancy or edge to get risk neutral. Then the worst that can happen is, if I'm following a vetted plan, is to scratch the trade and my broker sends me a gift basket. Or I take a full stop. Or I get risk neutral, and I manage my trade per a structured plan that I have vetted, and the chips fall where they may. And over time, by following a process that has an edge, even though the outcome of any rotation or anything, Janet Yellen may trip on a cord or say something and the market loses its mind. All these things are possible. We don't control it. An algo can come in. A piece of news can come in. Anything can happen. An iceberg can come in and disrupt our trade. We have no control. What do we control? Ourselves, and our trade plan is the path. That, I hope, makes sense. This is the short. You'd be managing the short, and you'd still be in it. This is TraderLab Trading. Hope you're getting something out of this. Please give a thumb up in the stream. If you're in YouTube, if you're in the bottom of YouTube, I'm losing my mind. I'm truly losing my mind. In the bottom of YouTube is a link to the Bookmap Discord TraderLab chat. There's 60 PDFs of these structured trades you can download. You'll see them over and over and over. They're not mechanical. There's more to it, isn't there? It's not plug and play. You need to come to TraderLab, roll up your sleeves, make a commitment to build a business and a career for yourself. If you're just looking to have fun and click the mouse, TraderLab's not for you, and probably neither is trading. That's gambling. Now, gamblers enjoy themselves. They have the cocktails, and you get the ticket to the buffet. I think if you're going to gamble, then you go to casino, and you put up the dollars. Whenever I go to casino, I know I'm gambling. I know I don't have an edge, and I allocate X amount of dollars. I go with my buddies, which I haven't done in a long time, but I used to go after we would trade. Back in the day, we'd all jump on a plane and fly somewhere and gamble. If you can imagine, after managing money and trading all day. Imagine sitting on a trading desk, then you want to go to a casino. Well, back in the day. So we'd jump on a plane, and we'd all go, and we'd, throw X amount of dollars down on the table and have a good time. Never with the anticipation or expectation we were going to win. Only that we were going for entertainment, camaraderie, and that was what the goal was. If we happen to walk out with some dollars, bonus. But that's gambling. Isn't that different than this? This is a business. Now, the casinos, think what they're doing. They're going to get my dollars. I'm going to get the buffet and maybe more. And the cocktails and all that. And it was great. But I never went gambling and expecting to walk out with the dollars. I allocated X amount of dollars for entertainment. That's what it is for me. And a lot of traders are just entertaining themselves with a video game. I know a lot of you guys, have grown up, if you will, with video games and have extrapolated this into the new video game. Guys, this is business. This is not a video game. It's not the same. And if you're approaching it with a click the mouse and an adrenaline or dopamine rush, that's not sustainable, in my opinion, even though you will have winning trades. So this short is still working. I hope you're finding this interesting, guys. Give me a thumb up if you are. And how about TraderLab? Jose, yes, this is being recorded, but these streams are available exclusively to the Bookmap Discord TraderLab community. TraderLab, there's no cost for TraderLab, but it's not it's really more for serious traders. If you want to access this in the library of webinars, there's, I think, 26 of them up there in all kinds of configurations. See, the thing about the market is we can create structured trades, and you'll see them in all those PDFs. Here's the key. What is the condition of the market? The market changes on top of itself in fractals. So what it does is the market may be subject, and this is where I talk about fractals and time frame. The market can be directional, but it can rotate on itself. So we're going down, but look at this. What do you do about that? Well, we have in our trade plan, if we think the market's going lower, and it might be going higher for some of us, I don't know. This could be a long from here to here. Or it could be a short from here to here and helmet. For me, it's the shorts, you see, but it doesn't matter. If you're a shorter term trader, this is a long to here. So for me, the trend is down in the developing time frame. So this is the last short. Is this stay under here, just short, and then it's manage the trade because we're in a gap. I don't know where it's going. I truly have no clue. So if I know I don't know, then my job is to just look at the volume using these consolidations for management. Here's the volume break. Here's the volume break. Here's the volume break. My stop can be here. My stop can be above this volume. So this consolidation here, too high. This consolidation here, too low. Trade can be done here or here. Either way, I have no problem with this, to this, and then to wherever. Are you guys tracking? Can you see the methodology? Oh, and I'm starting to mention context. The context is down, and this is a different context in a context. This is outside in trading. It's called mean reversion. If this is the mean and we come outside, remember, retail. Oh, it's too high. I'm not paying that. Microstructure. I'm not paying that. Seller. Test. South. Test the price. Is this too low? I'll come back here. Too high? I'll break below. If I can't get back above this, I'm going south. That's as complicated as this is, and random. What about this thing? Liquidity resting in the book. This can be an exit if it's in your plan. And remember, I don't call trades. What I'm going to show you in the stream is phenomena. Here's the buyers. The book is swept here. The sellers are absorbed. 600 bytes. So right here, I know there's trouble. And I have to get below this to go lower. I know my buyers were stuck here. And my volume is here. If I come above this, it's a good reason not to stay in. This was the last place you see it was too high. Now, do you exit here? You could. Or you exit here. It's not for me to say. Where's the mean? Here. Where might we come? Here. Or just here. We're going to watch this. This right here is a potential short, not a recommendation. The stops are here and here. Now, we're going to watch it. Post your questions, and we'll see what happens. For me, this is mean reversion. This is more likely. So I'm going to watch behavior here. I see nothing yet. That's against this volume, but there's stops here. You see, the thing you got to think of, you got to think a couple different ways. There's stops, and we might get a reaction here. I think we're coming here, but that doesn't matter. It's what the participants do, not what I think. One thing I can tell you is, for sure, I know I don't know. I use the term clueless. And the word clueless doesn't mean ignorance. It means open to anything, because that's the nature of the market. So this is a location to observe, not a trade recommendation. Let's just watch the microstructure, see if we can see anything. Bookmap, watch. No buyers, liquidity in the book, seller here, buyer here. Sellers here, buyers here. This determines what's going to happen next, right here. Watch the behavior. Not a recommendation. Just watch the yellow brick road. They pull, they're opening the door. So now we want to see what happens here. Just watch. They open the door, that may give us this. I can't tell you because it's not my job to know. Can't know. See? I cannot take a short here, though. Not a recommendation. This is a very important level right here. But this is problematic. So we'll see. Buyers are above this level. Sellers are under here, under here. They pulled. That is suggesting if right here, this is like a balance point. See the volume? So that's your fulcrum. Let's just watch what it does. I don't call trades. I'm laying out the pieces for you. Now you imagine what is next. You tell me, or yourself, you'd have to tell me, what is it going to do? Is it going to break low from here, or is it going to come back here? What's it going to do? Based on what you're reading in the order flow, what's it going to do? High volume, location. They pulled retail price, balance, mean reversion. Is this it? Or are we going to come here? Let's watch. Just narrate it in your brain. Just think about it. What's it say? I don't use any indicators. This is language. Can you speak market? They're pulling. They pulled. This guy pulled. We're either going to break from here or come here. So this is like a pivot of sorts, okay? I have no opinion. I want your opinion. Can you see why what's happening here and how you might use it? Nobody can predict the outcome. How might you use this? Think about it. There's no right or wrong answer because it's the best you have is maybe. What I do know is this is a level to observe for behavior. I have what you might call as an over-under right here. Can you see it? Thumb up in YouTube if you're getting something out of it. Remember, guys, if you're interested in understanding market mechanics, how the market works, why it does what it does, how you might be able to interpret it in real time, this is what the TraderLab is about. There's no secret sauce. There's none of this, magic love potion number 9 doesn't exist. All we can do is take risk and hopefully operate with an edge and over time extract the dollars. Every moment in the market is unique. Anything can happen. This is very dubious. Look what's going on here. This is your high volume node. This is your resistance. It's not a trade recommendation. This is a trade location. So we have alignment. Our risk, of course, is coming back here. So if you took a trade, your entry would be like here and your stop could be right above here. It's not a recommendation. I'm just saying is if you took it, the problem again is this. So, it's really your plan. So now this is really interesting, right? And this was problematic here. You notice how they came back in? So they're playing with this. So this is your mean reversion. How can you know that when we see this, that we won't come down lower? You can't. Where was our last volume? It was here. There's the top of the volume. There's your test. So, it is what it is. We have an auction at 12 noon also. I think it's a 30-year bond auction. That's going to create a ripple. It always does. Any questions, guys? Hope you're getting something out of this. Slaughterozzi, how are you doing? Marzini, my overnight VPOC is ETH open 5 p.m. Central Standard Time. So whenever the ETH starts, that's when the volume comes in. That's what counts. It's all the volume. Now, it doesn't mean if you're trading London or something that you might not use that because there's more volume in London than, but I just use I just do the same thing. I don't try to separate it. To me, it's all the volume. And by the way, guys, if I take this trade, I take a stop. Okay? No big deal. I mean, emotionally, I'm wounded and distraught, right? Isn't that how you feel? Feel Journal feelings. What are your feelings? And now the next question. Does the dealer in the casino get depressed when somebody walks out with cash, or do they just deal the next hand? That is our business. We are attached. It's all about, quote, being right, being successful, getting approval from the market. Wrong business. The market's not here to give you that. VPOC migration, too high. You got to watch this right here. This right here is a potential short, not a trade recommendation. Let's watch it. This is a structured trade in TraderLab. This is very funky. This can come right up here. So right here is a structured trade. It's called VPOC migration. Let's watch and see what it does. It's a funky location because you got to get below this out here. So these are kind of crummy, you know, but they are structured. Let's watch it. Now, if you took a short against this and you took a stop, would you skip this trade if it was in your trade plan? Question, you see? Does the dealer skip the next hand if the gambler walks out with a suitcase of cash on the last game? You see? That's the question for you. Isn't that counterintuitive? Because we don't want to be wrong. Can you define right and wrong in trading? I'll give you my opinion on it. It's not the last trade. It's all the trades and following my plan. The outcome of any trade is random. How can I be right or wrong on anything other than following my plan? If it has an edge and I've done the work. If my plan has an edge, I could take 3-4 losers in a row. And I'm going to be what? Distraught over it? I'm going to be emotionally attached. We're wired for that. But my business is about taking the trades that fit the plan. That's it. So what I know about this trade is, if I get short, I can come back here. And I can't get short here. Wish I could. There's two ways to trade this. I can go on the run, have more risk, or wait for a retracement to the microstructure right where the buyers failed, which is right here. This is also a possible entry, and my stop can be above here or above here. If I get taken out here, it's going to come here. Am I going to shoot myself? Not today. This is hard because this is returning to balance. This is mean reversion trade. So this is very hard trade. You know, trading in the middle is hard in this condition. Because what the idea of mean reversion is to try to get outside to come back here from above it. But the thing is, more volume is here, suggesting this is too high. So we have kind of a conflict here. This short would make sense here with the stop out here. It's not too many. It's not a lot, you see. And I'm not calling trades. I'm really giving you a sense of structure. So let's just see what it does. We got a little bit more time. Questions while we're waiting. And I don't consider this a great trade. I'm just saying it's structural, and this is where you would be looking at it. And then if we keep rotating up, then we're going to squeeze and potentially come out to the other side. That's what I know about it. So this is an area to observe, okay? We'll see if it does anything. And we can still come back here. We can come all the way outside. And this trade would fail, and that would be that. So we'll see. Meantime, questions, guys. And thanks for visiting TraderLab. Jose, are you in the Bookmap Discord TraderLab? Notice the behavior, guys? Now, right here, we get above here, then the short is over. This was your outside edge. Right here. See, what's the better location? Well, obviously, in hindsight, it's here. I have no idea right here when I see this selling that it's going to go there. That's part of the randomness. If this is too high out here, this variable high volume node, which is what this thing is, and I see absorption here, buy stops, and I get my seller right here, then now that's the deal. Not pretty. It is what it is. But what I understand is not what will happen, what might happen and where. That I understand. Are you guys with me? Hope you're getting some value from this. This is what we do in TraderLab. Well, Jose, you come to TraderLab if you're interested in what we do in TraderLab. It's a community of traders. There's no cost. Click the link in the bottom of YouTube and you can download all the resources. 60 PDFs of these trades right here that you're seeing. A library of webinars on what's going on here in many different configurations and transitions in the community. Plus, I narrate during the day. I post. I drop in and do audio, all kinds of different stuff, but I don't call trades. I'm allergic to calling trades because that's what you can always, there's everybody out there will take your subscription dollars. So you can, and you don't need that. You should, nobody needs that. If traders can't learn how to trade, then they're not traders. They have no longevity in this business. This is where you put a stake in the ground and you say, I want to be a trader. I want a career. And you roll your sleeves up. And I can assure you, you're going to go through a very intense experience. It will take you time. And I'm not talking 30 days. If you're in a hurry, this is the wrong business. We are in an elite business competing against the best minds on the planet. I have worked with hedge funds, quants. I understand this business. Believe me, or try to believe me. And if you don't, it's okay. We are the minnows, the guppies. We are the least sophisticated. And the tools we have in our trading toolboxes, everybody's got them. Everybody's doing what everybody else is doing. The difference is having a high tier tool so we can learn order flow and integrate it. Most retail traders don't have any clue about order flow. The other thing is they have no clue about how the market works because they think the market and trading is plug and play indicators out of some toolbox. Why are there 100 indicators in a toolbox? Wouldn't you just need 2 or 3? Why are they all in there? And do you think it's just the right mix? When I say you, I'm talking the collective, I'm talking to myself also. I thought it was tweaking, tuning, right mix, and I'd have it. And because of the random nature, things work at times. Gamblers walk out with cash, you see, things work. But over time, I can assure you professional traders are not doing what retail traders do. They're not doing it. Why wouldn't they? Because they depend on the retail traders or, quote, the gamblers doing what they do. That's how they can extract the dollars from the gamblers. The gamblers are all doing the same thing. Well, maybe we should learn from what we've done, but not keep doing it if it doesn't work. Okay? This is resistance up here now, this area. So right here, let's look at the volume. It's right there. So this short, not perfecto, but okay. You'd be scaled, you'd be risk neutral, now you manage the trade. Now, where's it too high? here. This is resistance. Now, subject to how tight you manage, this is resistance. You break above here, this trade would be over. This is where fractals and time frames come in. You see? I don't have the answer for anybody. I just have the answer for me, because it's a matter of that psychological alignment. There are some traders that are going to use a shoehorn and micro manage their trades and get taken out. And then maybe this just rotates and goes down another 20 points. Other traders are going to be trading in a higher time frame and are willing to give the MFE back. You see, that is a psychological alignment or decision. Where's too high, by the way? See? There. Where's the stops? Here. We keep going. Where do we go? There. That's what I know. What they're going to do? No clue. Hope you're getting something out of this. Please give a thumb up if you're in YouTube. Support the channel and subscribe to it. And if you're interested in what we are doing in the TraderLab, this is what the TraderLab is built on. But it's individual traders carving out their piece of the market. You could use this approach in any time frame with any product. In other words, it doesn't matter. You want to trade crude? You want to trade NASDAQ? What do you want to trade? You know, you've got to gold, pork bellies, doesn't matter. Pork bellies. Haven't traded those in a while, but I've traded those. Cattle, hogs, corn, you name it. Then they're done there. Currencies, doesn't matter. Guess what? It's all the same. The difference is tweaking and tuning to the depth of the market and the idiosyncrasies. You know, gold's manipulated. You guys should know that if you trade gold. You know, there's a lot of idiosyncrasies to these different markets. NQ, it's thin. Risk management, you need a different approach in NQ because the book is thin. ES, as long as you have the range and the rotations, you've got depth of market, you're not going to get skidded, most likely. Not for a lot because of the depth. You know, NQ, you can look in the limit order book there, and there's 12, you know, sitting in the book. If you have a stop, they'll catch you later. I remember I traded NQ exclusively for years during the dot-com bust. It was amazing. But when a stop got hit, it would be like, yeah, we'll call you later. It really was. And it was the same thing when I used to work, you know, on the trade desk. And then back then it was floor traders, and I'd have my guy on the edge of the pit, and you'd give him latitude. You'd give him, we'd actually place orders and say, you know, with a couple tick, you know, in between so that the filling broker could get the orders placed. I mean, it's a different world today. Anyway, so this trade would be over, subject to how you manage the trade. You see what I'm saying? What is your time frame? How do you get the answer to this? Come to TraderLab. Now, this sets up called the IB failure. But for me, there's no range for this. This is a long, once you come back over here and you get through all this, this is your target. So there's no trade for me. But target is this and this. We'll watch it, okay? This could be a long. I'm not going to say anything more about it. It's subject to your trade plan. Or, see, this is the beauty of trading. Or you're done with your short and now you're going to do lunch. You got an auction coming. What are the shorts doing in front of the auction? They're covering. Because it's going to be wild. It's like a key report. And you're going to get a whipsaw and you're going to see the algos turn off. If you are not aware of these reports and how you should manage yourself in front of them, then you're not doing your job. This is all what we talk about in TraderLab, and we support each other. If you're interested in TraderLab, click the link in the bottom of YouTube. I got some more I'm going to talk to you about. I'm going to give you just 30 seconds of what these trades look like. This is a structured trade. So basically, it's just stuff I did. And I'm not a vendor. There's no subscription costs or any of that nonsense, you know. There's no cost. And I'm not a vendor, and there's not a course. It's a community. It's the leverage of a large group of traders looking to build the business of trading. These are from like 2020. And Bookmap asked me at the time, throw some stuff together. Other traders are asking me, what are you doing? All right, this is what I'm doing, you know? And I really don't think too much about it, but I do understand what it's like to be a retail trader. And more so as I was developing as a professional trader, going through nightmarish experiences, being responsible for managing many millions of dollars and trying to create systemization and curve fitting it, having good success and then watching it decay, and then continually going back and trying to stay ahead of the decay. I didn't understand that I was in gaming, not curve fitting. And then once I kind of the bulb went off and I started thinking about it differently, I had to change what I was doing. So I learned market profile, I think in 1985 or so. I can't remember exactly when it was, somewhere in there, from Peter Stottlemyre at the CBOT. He created it. So I started, and I was already using aspects of the auction, but I didn't know it was, quote, auction market theory. I just did, you sit in front of a screen for years, you start seeing behavior and you start asking yourself, what's going on? Why is it doing this? Anyway, if this continues, this is the targeting in this trade up into this area here. Not a recommendation. So this is what's available. If you're interested, please give a thumb up in YouTube. Click the link in the bottom of YouTube. Visit the TraderLab community. By the way, there's not one way to trade. Bring your ideas. By the way, think about this. If you have a losing trade, would you post it in a community or would you keep it to yourself? Do you know that traders have the courage to post when their trades don't work so we can all observe and understand what didn't work and maybe why? Would you do that? Do you know what it takes in this business? You got to leave your ego out the door. You can't afford an ego in this business. You need humility. Humility is an asset because now you're not in the business of predicting. You're in the business of knowing you don't know. You can't afford an ego because that ego has nothing to do with the business. It's emotional states again. The need to be right, the need to be knowledgeable. And if you want to learn humility, become a trader because when you think you know you don't know. And when you can embrace knowing you don't know, then you're not responsible for the outcome of the next trade. You're only responsible for waiting for a trade that has the statistical edge. And you'll learn that if you come to TraderLab. You'll learn about all the things that torpedo us. And we do it to ourselves, guys. Nobody's doing it to us. It's not the algos. It's not the HFTs. It's not Yellen or Jerry Powell. It's nothing but ourselves and the random nature of this business. If you can accept the business you're in, modify your expectations, your anticipations, and have a plan to operate in this business, you might have a chance to stay in the business. Please give a thumb up and remember what our targeting is here. So this is a viable long if it's in your plan, or you just go to lunch. Remember, 12 noon is the auction, right? So you might just say, I'm out of here. We'll stay here till noon, see the response to this 30-year auction, and we'll go from there. Thumb up in YouTube. Jose, I don't have time to go over NQ. Become the TraderLab. We have NQ traders in the TraderLab. That's kind of like going into, I call NQ the snake, and it's only because it's thin. I think it's a great market to trade, but it's not for new traders, in my opinion. If you can't trade it yet, and I don't mean you, I mean anybody, if you can't learn to trade in the ES, which has depth, which will help you, NQ's like grabbing a snake by the tail, or the saber-toothed tiger for that matter. Here's the report. Let's watch it. "12 noon is when this thing comes out. That's the auction. Then we're going to see the, well, it's covered. and what it's done in. And if it's good, we'll get a rally. If it's not so good, we'll get a ripple to the downside. Remember, the trade is along up to here. I would not be on this. Why? There's thousands of trades in a career. For me, I would just be out of my short and I would not trade in the report. Why? Risk management. If I get long, which this is a structured trade, I'm going for this, but it could also give you one of these things and then I get skidded. And there's just no, for me, it doesn't matter, you know. So I'm just telling you, it's just my own trade plan. It's not yours, it's mine. If you're interested in NQ, come to TraderLab. There's no cost to become part of that community. It's a professional community. It's not romper room. It's not. There's no entertainment other than working together. The idea of TraderLab is to leverage our collective experience to make something better. Together, we are better. Trading is a lonely business. We operate under a rock. Nobody understands this business but other traders. So if you want to be in that community, click the link in the bottom of YouTube. You can come over there, say hi. Now, here's the other thing. When you come to TraderLab, ask the traders in TraderLab, what would they do differently when they come to TraderLab? How has it impacted their trading, their results? What about those who were not successful, who now are? What about those who now have prop accounts, are taking profits out? And what about those who are still working at it and haven't reached their potential yet? Come to TraderLab. Thumb up on YouTube on the way out, guys. Thanks so much for visiting today. Look forward to seeing you guys tomorrow. And don't forget the thumb up. Appreciate it. See you guys soon. And trade with a plan. Visit TraderLab if you don't have one.